signal.
Good morning, everyone, and welcome to Bank of Jamaica's quarterly monetary policy press conference. Thank you for joining us, whether face-to-face or online. As is customary, we have with us Governor Richard Biles, Senior Deputy Governor Dr. Wayne Robinson, Deputy Governors Natalie Haynes, Dr. G.D. Lewis, and online we have Robert Stennett. Our agenda is as per usual. Governor Biles will speak regarding the bank's latest monetary policy decision in the context of the bank's outlook for inflation and the overall economy against the background of the economy's performance for the last quarter. After Mr. Biles' presentation, the floor will be open to allow for the question and answer session. Governor Biles.
Thank you, Melanie. Good morning, ladies and gentlemen, and welcome to our quarterly monetary policy report press conference. I have with me today a number of persons that you probably know. Senior Deputy Governor Wayne Robinson, Deputy Governor G.D. Lewis, and Deputy Governor Natalie Haynes, and they will be answering any difficult questions that you may have. Before I speak on the recent monetary policy decision, I'd like to make some brief remarks on the bank's inflation target. In April 2024, Bank of Jamaica received written confirmation from the Minister of Finance and the Public Service that the inflation target for Jamaica will be maintained at 4 to 6% for the next 3 years. This inflation target is a major policy instrument for the government of Jamaica, and it is an important guidance tool for the entire economy. The target is the anchor that underpins how individuals and businesses should view current and future changes in the general level of prices in the economy. The determination of the target by the minister followed consultation with the central bank. The bank's recommendation to maintain the inflation target of 4 to 6% reflects our view that the target is generally consistent with the country's economic structure and stage of economic development. Clearly, Jamaica would not wish to have a higher inflation target. Lower inflation is desirable, but is difficult to achieve in the near term for a number of reasons. The first is that Jamaica has a weak monetary transmission mechanism. Among the primary constraints to the transmission mechanism in Jamaica, particularly via the credit channel, is limited competition in the banking sector. The dominant players hold high levels of low-cost savings deposits, which make their funding cost less sensitive to the central bank's policy actions. This limits the ability of the central bank to target a lower inflation without significant economic and social costs. By way of example, our assessment is that with the existing system, the central bank would have to raise interest rates to double digits to contain inflation below 4%, which would dramatically increase financing costs and reduce financing opportunities. These actions would also reduce the government's ability to achieve the targeted reduction in the debt to GDP ratio by pushing up interest costs on GOJ debt. It is also of primary importance that the targeted rate of inflation enables nominal GDP to grow at a rate that is consistent with the country's debt reduction strategy. Targeting a low inflation rate is also hampered by low factor productivity. A highly productive economy produces goods and services at lower unit costs, which dampens inflation. On the flip side, lower productivity means that goods and services will become relatively more expensive over time, which makes it more difficult to reduce inflation. Finally, a significant part of the consumer price index, the basket of goods and services that people buy, includes goods and services for which the prices are regulated by the government. These include PPV fares and utility rates. In this regard, regulated price adjustments, particularly when they are large and unpredictable, complicate the job of the central bank in containing inflation. Bank of Jamaica remains committed to pursuing measures to improve the transmission mechanism to facilitate greater and quicker pass-through of policy rate adjustments in the banking system. The correspondence between the Minister and the Central Bank on the inflation target has been published on the bank's website. Let me now turn to the business of the MPC's recent decision. The bank's Monetary Policy Committee, MPC, met on the 16th and the 17th of May and announced a decision yesterday to maintain 1. The policy rate at 7%, 2. Relative stability in the foreign exchange market, and 3. Tight Jamaican dollar liquidity conditions. This decision reflects the committee's view that while inflation is continuing its downward trend, it is still not yet firmly anchored within the target range, and the risks to future inflation are skewed to the upside. Statin reported on Wednesday last week that Jamaica's annual headline inflation rate at April 2024 was 5.3%, which is within the bank's target range and lower than the rate recorded at March of 2024. The bank is encouraged by this outturn, which represented the third consecutive month of lower inflation and the second consecutive month in which the annual inflation was within the target range. The April 2024 outturn was also lower than the bank's most recent forecast, mainly due to faster than projected deceleration in agricultural food inflation. Core inflation, which excludes food and fuel from the consumer price index, was 5.7%, and although elevated, was marginally lower than the outturn recorded in March 2024. Some of the key drivers of headline inflation, such as international grain prices and inflation expectations, continued to decline. Inflation in the economies of Jamaica's main trading partners has also continued to moderate. However, international oil prices have been volatile. Looking ahead, despite the encouraging outturns at March and April, the decline in inflation is expected to be interrupted temporarily, with inflation projected to breach the upper end of the target range towards the end of the June 24 quarter. This is expected to reflect mainly seasonally high agricultural food prices, a normalization in electricity rates following significant declines in the same quarter of 2023, and higher transport-related inflation due to the uptick in oil prices. Thereafter, inflation is projected to return to the target range and generally remain there over the next 8 quarters, with the exception of a few months in 2025. The current outlook for inflation is lower than the previous forecast that was shared with you in February 2024. The improved outlook is mainly due to the removal from the forecast of the second increase in public passenger vehicle PPV fares, which was scheduled for April 2024. This is consequent on the government's recent announcement to postpone the second increase. Processed food prices and the cost of meals away from home were also revised downwards due to lower international grain prices. This is partially offset by the incorporation of the forecast of the announced increase in the national minimum wage and higher energy and transport-related inflation due to higher international oil prices. Turning to the risks ahead, notwithstanding the improved outlook, the MPC considered that the risks around the forecast were skewed to the upside over the next 8 quarters. In particular, while core inflation has moderated, it remains close to the upper end of the target range. Additionally, both measured and surveyed-based indicators of businesses' inflation expectations, although lower, have maintained or have remained above the inflation target. Larger than projected regulated price adjustments could also influence higher inflation. There are also some upside risks that are external to Jamaica and could influence higher inflation. These include higher than the projected oil prices and worse than anticipated weather conditions due to the emerging La Nina weather phenomena that could result in a more active 2024 hurricane season. On the other side, the factors that could result in lower than projected inflation include weaker than projected global growth, which could reduce domestic demand and reduce also imported inflation. The MPC noted that a decision to reduce interest rates will depend on incoming data related to the risk to inflation noted above. In particular, the evolution of wage adjustments, inflation expectations, and core inflation are among important factors that will guide the MPC's decision on policy rate adjustments and other monetary policy actions in the future. The bank will maintain heightened surveillance of the risks to inflation. Let me provide a brief update on the foreign exchange market and the Jamaican dollar liquidity. Over the past 12 months to the end of April 2024, on average, the Jamaican dollar depreciated against the US dollar by 1.4%, continuing a fairly stable trend over the last 2 years. There was, however, an uptick in the pace of depreciation in April, which was primarily resulting from the seasonal increase, in demand following the end of the March tax season. To prevent undue volatility in the foreign exchange market, BOJ has sold approximately US $983 million via its BFIXit facility over the 12 months to the end of April 2024. When these sales are set against BOJ purchases, the result is that the bank net purchased approximately US $1.3 billion over the period, resulting in an NIR of US $5.1 billion at the end of April 2024. The pace of depreciation slowed over the first 2 weeks of May, and the bank will continue to act to ensure orderly movements in the exchange rate. Consistent with these developments, and reflecting continued confidence in the Jamaican dollar, DTI deposit dollarization, which is measured by the proportion of DTI US dollar deposits to total deposits, has moderated. Looking on Jamaican dollar liquidity, to support the stability of the exchange rate, Bank of Jamaica continues to maintain tight Jamaica dollar liquidity. This stance is reflected in higher yields on the bank's 30-day CD and increases in private money market rates. The average yield on BOJ 30-day CDs, for example, has fluctuated between 10 and 11% over the last 6 months. Looking on the Jamaican economy, it continues to grow, but at a more moderate rate. Real GDP for financial year 23-24 is estimated to have grown within a range of 1.5% to 2.5%, and the economy is expected to grow in the June 24 quarter, albeit at a slower pace. Looking ahead, the bank projects that real GDP will increase by 1% to 2% for financial year 24-25. This growth is projected to be broad-based, with modest increases in hotels and restaurants and its allied industries, mining and quarrying, agriculture, forestry and fishing, manufacturing, and electricity and water supply. Ladies and gentlemen, to conclude, let me state the primary mandate of the Bank of Jamaica is to see inflation firmly anchored between 4 and 6%, and we remain resolute in this commitment. Thank you. I will now take your questions.
Please go ahead.
Morning, Governor. I see where you mentioned that an inhibiting factor to your inflation target is a lack of competition within the banking sector. Would you be bold enough and prepared to indicate that the BOJ would be prepared to open up the sector in order to address this problem that you so indicated? And secondly, would you say that our banks are behaving like oligopoly? Why we have this problem? Because I remember the times where you talk about the interest rate, the returns on interest, and the fact that you don't see the banks moving in tandem with your reduction.
Yeah, thank you for that question. It's never been that the Bank of Jamaica is closed to any new application for a commercial bank license. We are open. We have never shut that door. The fact, though, is that whilst we have 11 DTIs, the two really dominate the situation, the industry. And that's so perhaps for historical reasons. And so that is the problem, that we have a skewness in the financial sector, where approximately 60% of the deposits reside in 2 of the 11 institutions. So the problem that we have is to create more competition, partly by, if anyone wants to come into the sector, but also by making it easier for persons who are customers of any bank to move their account from one bank to another. So if a customer feels they're not getting a good rate at one bank or a good service at one bank, they can move quickly and easily. Now, I don't have to tell you how difficult it is right now, which has to do with a lot of the MLCFT policies that are in place, and you have to have all kind of different documents, and there's a long process to opening an account. What we are trying to do, and we have started that work, and we can ask Dr. Lewis to speak a little bit more about it, is to create a central electronic database of all of the know your customer information that is required for opening a bank account. So a central database that all of the bank's customers, regardless of which bank they belong to, have their data residing in. And they can move that data to any bank to open a bank account, just like that. Right? So that is the idea that we are working on. And it's a process that is a medium-term target because it takes time to get that done, but we are actively pursuing it. And I'm going to ask Dr. Lewis to just speak on it for a minute.
Thank you very much. So the idea, I think, has been well articulated by the governor. The North Star for it essentially is that with very few documents, individuals should be able to enter any banking hall and have their identity digitally verified, which is a big part of your know your customer obligations that each bank has. And so they would be able to be authenticated via this centralized registry. POCA, which is a Proceeds of Crime Act, was recently amended to allow banks to share KYC information with each other. So what this registry would do is just create a digital mechanism. So that's the project that is being embarked on, and that we believe will make a material difference in terms of customer experience with banks, especially in the process of opening an account and by default also closing accounts. So that should help with movement across the financial system.
Part of the question has to do with the two leading banks. And I'd ask if you would be bold enough to say that they are behaving as if they are oligopoly in the banking sector.
I don't think it serves any purpose to say that. I mean, they have strong positions, and just like any other business, they act in accordance with that strength. It just so happens that that runs counter to our ability to manage the monetary policy transmission system. And so we can't accept that position. And as we have been saying, one approach is to leave the door open for new banks to enter, but also to give customers the right and the opportunity and the facility to move their account around easily. I heard Dr. Lewis speak the other day, and I thought you would give that example, but I don't know why he didn't. When you enter Jamaica nowadays, you take your passport and you put it on the reader, or you go online and you enter your stuff and you go right through. Now, behind all of that is a multitude of checks and balances to make sure that it is Richard Biles that is really coming in. But it's easy, and you just scan it or you enter it and you pass through. That's what we want to try to achieve with the eKYC, so that when you have your account at Bank X and you want to move it, it really is just a matter of you showing your, so to speak, bank account ID to another bank, and you are processed automatically, just like if you are coming into the country with your passport and your visa.
Hi, good morning. I'm Jamila Maitland. I'm a reporter from TVJ. In your statement, you said that inflation is expected to breach the upper limit next month. Is there any projection as it relates to by how much? And you said that it would normalize afterwards, with the exception of a few hurricanes as La Nina weather and oil prices, to what extent do you see this summer, the heat, playing a part in all of that, and the demand to be cool, the demand for fuel which drives electricity?
Sure, and driving us crazy too. The
Right.
heat will drive us crazy. I will ask Dr. Robinson to address that question about inflation and popping out of the current.
Thanks, Governor, and good morning, everyone. Right, so primarily because we're in the season where agricultural prices are seasonally higher. And as you know, it's because of the climatic factors. So over the next couple of months, we expect that inflation could tick up somewhere between 6.5%. But of course, there are always upside risks because we really can't pin down a variable like agricultural prices in the context of weather because it is so volatile. And of course, as you rightly pointed out, and as any farmer will tell you, the heat conditions is also exacerbating the production crisis that the agricultural sector is facing. We also expect, based on the weather forecasts, that we could also have a more active hurricane season this year because of the La Nina effect. So all of these are really risk. We do try as best as possible to factor in some adjustments in these prices arising from this, but we can't fully pin it down. And so that is why we flag the upside risk to inflation. And of course, we know that oil prices, they remain volatile. OPEC recently announced additional cuts, and we think that will continue to cause oil prices to tick upwards, and that will feed through primarily to transportation costs, gas prices at the pump. But outside of that, though, the general picture is that we are still on a downward trajectory. It's not going to be smooth. It's going to be a little bit of a bumpy landing, but we believe that certainly by the end of this year or by the second half of this year, we should be back more or less in the target range. But in the very near term, because of these extraneous factors, we're going to have a little bit of bumpiness in terms of the inflation and our target range.
Thank you, Dr. Robinson. We have a question online from Stephen Jackson. The summary of the monetary policy decision indicated that geopolitical tensions reflected a risk to the economy. Does the death of the Iranian president heighten these tensions?
Of course. It's almost like every week something happens in the world that causes us to be concerned about the political and economic effect on little Jamaica, even though we're thousands of miles away. It just seems to be normal nowadays. So yes, we're concerned about that particular incident, but concerned generally about many other incidents, the Russian-Ukrainian war and what effect that can have, as it has shown. So it's always a risk that we are taking into account. Can't do anything about it. We just have to keep it in the back of our minds, and try to navigate as best we can.
Good morning, Governor. Following from Jamila's question and Stephen's question, we see these exogenous shocks. We see the geopolitical tensions. I think when I read the report yesterday, you said over the next few quarters, we'll be living with this. What can be done to brace against those shocks? And I notice a few different countries now take a more protectionist stance. We're going to see this with China and the US. Is it something we should be looking to do? And what are your thoughts on that? Because, I mean, if you saw 6-7 months ago, we're in the same situation with Ukraine. Things are getting sticky, getting worse. How do we brace against that?
Well, these are issues that we have hardly, if any at all, effect on. And because we're a small, open economy, we have to recognize that we will never be fully self-sufficient. I'm very much in favor of us being more self-sufficient. I think that is not just good for us in terms of feeding ourselves, but from a GDP growth point of view, it's a positive thing. But we have to recognize we're too small to be able to provide everything. In other areas that we can, try to be stronger and more resilient, we should. We need to make sure that our tourism is as robust as possible, protect against, health hazards or social issues that disrupt the flow, make sure we have flights that come in, seats that come in. We have to make sure that the diaspora and ourselves are still on good terms. These are vital sources of foreign exchange. And we have to make sure that we build our reserves. And that is something that we at the Bank of Jamaica have some effect on. And we're very judicious in how we spend it and how we accumulate it. We also have control, or some influence, I should say, on the foreign exchange rate. And that is a policy that we have pursued quite vigorously since the pandemic, to make sure that when goods come across our borders, the rate of exchange isn't too volatile up and down, because that has a negative impact on business expectations and therefore the prices that business people set. So to the extent we have control over those, the foreign exchange reserves, we have some impact on the exchange rate, that we can protect ourselves from a tourism and remittance point of view. We should do everything in our control to do that.
Thank you, Governor.
Good morning. So the EPOC chair did say that given where the reserves are, he believes that the BOJ is at a point where they can actually lower the overnight rates. How do you respond to that?
I'm going to ask Dr. Robinson to speak to it, but I don't see the connection. Wayne, go ahead.
Well, as the governor indicated in his statement, we want to be assured that inflation is firmly back into the target, because that is our raison d'etre. That is our focus, that is our mandate. So our monetary policy is geared towards ensuring that we get back to the 46, and not only get back there, but that we actually stay there. So in looking ahead, we will, as the governor said, we will examine what the incoming data is saying. At this point, I mean, the forecasts for inflation, as I indicated earlier, do look encouraging. But because of the uncertainties, we have to be very judicious, be very cautious, and wait on the incoming data. Now, of course, the reserves assist us in terms of managing a key part of the transmission of the shocks to prices, which is the exchange rate. And we'll continue to use that to try and dampen any imported inflation. But the real anchor for monetary policy decisions, real anchor for interest rate decisions is where inflation is going.
So I thought, sorry, Al, just to clarify the question, you're asking about the BOJ CD rates? Is it the CD rates?
So your overnight interest rates.
Policy rate.
Yeah, so you want to address that?
Right.
Oh, sorry. Just following up, how do you then douse the clamor from a lot of players who say, well, look, it's about time you lower interest rates? I mean, it's the same situation in the U.S. How do you go about doing that? I mean, people have these expectations now, but you've made it very clear, and it is prudent, that you have to stay within the inflation target range. But how do you, in effect, for want of a better word, eviscerate the noise?
Yeah, so we want to see rates come down too. But we want to be certain that inflation is anchored. And that's an important descriptor, anchored. It doesn't mean that it floats in and floats out. It means that it is anchored and it stays there. And you can only know that if you watch it for a while. And what we have seen is that for 3 consecutive months it has come down, and for 2 of those 3 months it has been within the corridor. We expect that it will pop out again May, June, but temporarily, and come back in. So we're waiting for that, what we expect to happen, and to see it come back in the corridor for a month or 2, and to see what is really happening with expectations amongst business people, with core inflation. We want to see what's happening with wage inflation, and on the basis of those key indicators, we'll determine whether it is really and truly anchored or not. What we don't want is to come out, and say, let's lower interest rates, and we see inflation come out of the corridor. That's not good for us. It's not good for generally confidence of the country in the management of inflation. So better we just batten down for a little bit. I am hoping it won't be for long, and once we see it firmly anchored, then we can start to bring rates down.
Oh, just to add to what Al was saying, Governor, the pundits are out there speaking. They are saying that inflation rate is coming down, and this is a signal for the BOJ to reduce inflation, to reduce interest rates. I note you have given an explanation why rates can come down, but what would you say to the pundits who are out there telling the populace that it's now time for the BOJ to reduce interest rates, given the fact that inflation is now coming down in line with the BOJ target?
I don't know what more to say. I am part of the Jamaican public too, and I want to see rates come down, and I can see even more than many Jamaicans what impact it has on the economy and on the government. So believe you me, I want to see the rates come down, but we need at BOJ to be sure that all of the conditions are pointing in the right direction. And remember what I said, core inflation, we're watching that closely. Business expectations, we're watching that closely. And wage inflation, we're watching that closely. Those 3 things are going to have a powerful effect on what our decision is in the future.
Good morning. Luke Douglas from Loop News. I don't know if I missed it, Governor. The timeline for the digital registry for the banks, that's one. And secondly, general elections are due next year. We see the political tension being heightened. Do you anticipate that the campaign could have an impact on inflation?
I like how you put the question, that you thought maybe I'd missed the timeline. I don't think we had said what the timeline. That's like a crafty journalist. But Dr. Lewis kind of whispered to me that 18 to 24 months, we hope to have this in effect. The World Bank is working with us on it, but it's going to take a lot of cooperation between ourselves and the commercial banks themselves. And you can understand that, because what we're going to be saying to them is that you need to take all of your data on every customer, and there are hundreds of thousands of customers, and put that data into this depository. Right? So they need to know it's safe, secure, accessible, all of those safeguards, not open to cyber attack, because banks have to be very careful about their customers' data. So any central depository will have to be like Fort Knox. So it's going to take a little while to get it done, but the timeline we have internally is 18 to 24 months. You were asking about elections. Well, it always makes the atmosphere a little bit more acute. Sensitivities get, a little more intense. But we have a job to do. And BOJ needs to just keep its head down and do the job that it's been given to the best of its ability. I can't listen to noise that has to do with particular interests. I have to just do the job that is here. And I speak for all of the BOJ staff when I say that we know we have a job to do, and that's what we will do.
I was thinking particularly about spending. How will that impact on inflation?
You mean the fiscal spending, the government? Well, the ministers laid a budget in Parliament, and the budget shows a fiscal surplus. Whether it is as large as they originally expected or not, he would have to say. But it is a surplus, and I have no reason to believe that that is not the intention. The intention is to run the budget with a fiscal surplus that is in congruence with trying to achieve the target of 60% debt to GDP by 2028.
Governor, in terms of the fiscal policy and the monetary policy, is there alignment in terms of inflation targeting? Are you seeing an alignment or a misalignment in terms of inflation targeting?
Yes, alignment, and it has been so for a good period of time. When the government runs a fiscal surplus, it means they're taking in more in taxes than they are paying out in wages or any other expenditure that they have. And that is helpful to the central bank in targeting inflation. So yes, in general, the policy of government has been helpful and cooperative with our inflation targeting, and for a long time.
Just a follow-up to that. But we saw where the raising of the PPV fears impacted your inflation targeting, and you spoke to the fact that the increasing minimum wage would be also stoking inflation. So is there a misalignment where that is concerned?
I wouldn't say there's a misalignment. As you can imagine, with inflation that affects prices for everyone, you would expect that a PPV driver would need an increase at some point, that minimum wage earners would need an increase at some point, that utilities would need an increase at some point. So we have no problem with these things getting increases. The concern we have is that when it comes to us unexpectedly and in a lumpy form, that is what makes it difficult for us to manage. And the PPV was a classic example of that, where I believe they were given 16% last year, and another 17 or so was due in April. It's hard to stomach that when you are trying to get inflation back into the corridor. So from that point of view, it was a big challenge for the bank, yes. To the government's credit, I must say, and the minister in particular, he was appreciative of that fact and managed to roll back the second increase. I don't know how long that rollback will be for, and we'll have to brace for when it actually comes into effect.
Thank you, Governor. We have several questions online. This one is from Stephen Jackson. Latest BOJ data indicates that past due loans for the largest lending segment, individual and household debt, climbed 30% year on year. This figure also includes residential mortgages. What is the view of the BOJ on this rise, and does it speak to a rapid depletion of disposable income?
Okay, thank you for that question. So let us set the context for responding to the question, which is to highlight that the loan book of the banking sector is about $1.4 trillion. And the banks have to manage this portfolio in a way that ensures that they make a return for the risk that they're taking. And they have to manage the portfolio that is there. So typically we are not focused so much at the central bank on the dollar values, but on the ratios. So we'll be looking at the non-performing loans to total loans. And what has happened in the year is that although non-performing loans has increased, total loans has increased by a lot more. So our NPL ratio right now is about 2.3%, which is extremely low. I mean, we have other jurisdictions in the Caribbean with the NPL ratios in the teens, the high teens, 14, 15, 16%. And then when you look at the mortgage portfolio segment, you have NPLs at about 1.3%. So these are extremely low ratios. So when you just look at the number, it may seem alarming. Obviously, if something increases by 6 billion, it is a very large number. But relative to what the portfolio is, these are small movements. I would say as well that the mortgage portfolio, we're seeing that lending to mortgages has slowed down. That's consistent with what we're seeing as a slowdown in the real estate market. But to put that against the backdrop that within that last year that we're speaking about a slowdown, 11,000 mortgages would have been issued to new persons to acquire, whether it's apartments, homes. So the market is working. You know, people are acquiring properties. Banks are facilitating that by offering mortgages. They're managing the risk associated with their exposure to that particular segment, and they have the necessary resources to collateralize those lendings so that in the case of a default, they have access to the underlying property. So it's not something that we're particularly worried about at this particular point.
Thanks, Dr. Lewis.
Jamila again from TVJ. I want to piggyback on the PPV question. To what extent is the BOJ consulted before we have these announcements by the government that could disrupt your policies? And was it done in the case of the announcement for the fare increase for the PPV operators last year?
Yes, good question. Usually, the minister would consult with us. I've had several occasions when he has asked us to run scenarios of what if this was increased by 1%, by 5%, what is the impact that we estimated would have on inflation. And we've had that a couple of times. This one caught us totally by surprise. And it's surprising too that the minister didn't pick it up. Maybe he was not at cabinet at that particular time. I don't know. You would have to ask the minister the circumstances. But usually he has been very consultative with us about the impact on inflation. It's just unfortunate that this biggie slipped through and really caused a problem for us, which he has partially retrieved by postponing the second leg of it.
And just to follow up, in light of, a lot of persons were very disappointed, especially the PPV operators. I know you would have seen a few of the reports. Is there a push right now to have the consultations be readied, or some recommendations for a possible period where you can see the second phase being implemented and still keep inflation within the target, anchored within the target? I'm using your terms. Thanks.
We don't have at BOJ any indication of the second phase. We don't have any indication. But we would like to know when that happens, and we certainly have expressed to the minister, and he knows the impact it can have on inflation. So I expect that once he has an idea as to what that timing is, that we will know also.
Governor, just following up from both Jamila's and Josima's question, you had mentioned before, I do recall, about the implications with wages and so forth. You took some heat for it, I remember distinctly. But when you, looking at this situation now, and drawing back to Josima's question, how do you see the wage situation, given that you've got it skewed in the way, it's skewed more towards the public sector? What happens at the private sector? You fall outside the band, people demand more wages, and it just puts the whole thing out of line. How do you see that in the context of what you mentioned earlier?
We actually have a wage index that we track, which we do a survey to track every month. Maybe Wayne, you can speak a bit more about that.
Yes, so we basically asked the businesses what wage increases they would have given or agreed to, and what wages increases do they plan to. Up to about the ending of last year, early this year, that survey was signaling very strong increases, 15% in that range. The good thing is that the latest print is showing that the pace of wage increases is actually slowing, lower than the 15%. So that is a good signal to us. I mean, as we've said, though, coming to your question, as we've said in the past, it is not, what's critical is the extent to which adjustment in one sector of the economy has this demonstration effect on the broader economy. And so, as we had said initially, the real concern for us is the extent to which the public sector adjustment then feeds into a more broad-based wage adjustment in a context where the productivity in the economy remains low. And that is why we have been flagging this as a concern and as a risk, and we continue to watch that.
Just a follow-up. In our industry, media, for instance, you have a lot of people going to do PR, spokespersons, all sorts, wages, influencers, all the rest of it, quasi-journalists, and they're getting a lot of money now. So then a lot of them come to us in the private sector and say, oh, I'm getting so-and-so at JIS or some institution, TV, yeah, or whatever. We got to deal with that. So a young kid comes to you, 23, got a first degree or something from Caramac. They're getting probably 2-3 times what you wouldn't normally pay them, but they want this wage now. That's the reality. We got to deal with that. But you can see the implications of that with the rest of the society and the rest of the sectors. And in line with what you said, it's a reality. I mean, your detractors talk about it, but I don't think they really see that impact. And this speaks to the point, Wayne, you just made.
Al, you have a 23-year-old TVJ journalist here. You can just ask her.
I've wanted to hire her for a little while, but it's going to cost me. That's the point.
Governor, regarding the ATM service regulation, you'd have had reason to explain because the public was clamoring for monetary penalty for breaches. You had explained that the regulations do not allow you to impose monetary penalty. Stemming from that, Governor, the Twin Peak model that we are putting in place, it begs the question, do you intend to put monetary penalty for service standard breaches as is done with utility companies?
Simple answer is yes. In the new legislation that we are building now, yes, there will be penalties for trespassing on basic service standards, and I think that is natural, and the sector must expect that.
But as a banking customer, I was somewhat taken aback, and I thought that the BOJ was being timid in not imposing penalty in the regulation. Granted that it can't be done now, but as the regulator, you can push for changes to be made so that those monetary penalties can come into play.
Let me say, getting legislation passed in Jamaica is very difficult. It's difficult for two reasons. One is that the process that you have to go through in order to draft it and get it to Parliament is very enormous. I mean, various 6, 7 institutions have to see it, read it, quite apart from the lawyers that have to draft it, has to get cabinet approval, and then it reaches to Parliament, and then it is debated. And it's not uncommon for major pieces of inflation to take years to get passed. And that's what's going to happen with Twin Peaks. We've spent the better part of a year trying to get it through the process to reach the cabinet. We're near to that, but we haven't reached cabinet yet. And then it has to go and get drafted into law and then go to Parliament. When you have BOJ and you have this other organization and that other organization, and there's a whole lineup of persons with legislation that they want to have adjusted or changed or implemented, it's a terrible bottleneck. So we can't be as nimble as we would like to be. The fact is that Bank of Jamaica has really been built on the basis of prudential supervision. Coming out of the crisis of the mid-90s, remember when all of those banks and insurance companies failed and you had FinSac, BOJ's basic legislation and subsequent renewals have been deeply embedded with prudential supervision requirements. And I would say that we are at a very good place in that respect. But it has come at some cost of not paying attention to the market conduct and customer service side of the commercial banking business. So that whilst we're great at the prudential, we're weak on the customer service. So what we do is try to engage with the commercial banks and win them over to the point of view, which is logical, that they don't want to spoil their reputation, draw their attention to what is going on in the public, and try to get them to comply with higher standards. And that is what we have done, I think, up to now, successfully with the ATMs. We have to watch it, and as you may have seen, we are publishing the results every month. We have done 1 or 2? 3. We have done 3, right, so I've missed 1. We have done 3 months of ATM results. And Dr. Lewis can give you a synopsis of what's happening there.
Yeah, just to say, so those results are published on our website. They're also sent to the major newspapers and covered in relevant social media, picked up there. Since we've started publishing, what we can see is that there's been significant improvement in the percentage of ABMs that are operational. So Jamaica has 890 ABMs across the island, and in January, only 93% of those were operational. That number has jumped to 97%, and every single parish has ABMs operational 90% and more. And so we've seen that as an improvement. What that basically means is about 38 to maybe 40 ABMs have been commissioned into service or fixed and reintroduced into service. Where we're still seeing areas for improvement would be the uptime. We're still seeing uptimes of around 91, 90%, and the service level standard requires 95% uptime. So of the percentage of ABMs that you have operational, they need to be up and running in a 24-hour period, 95% of that time. So there's still some improvement there, and in terms of recovery time, we're still seeing where it's taking between 4 to 5 hours for ABMs once they're down to be brought back into commission, and the service level standard has that as 60 minutes for urban areas and resort areas, and 3 hours for what we are terming as rural areas. So we're expecting that over the course of a couple of months that we'll see improvements in there, in those performances. So there's some movement. Hopefully it's palpable so that in terms from a customer experience perspective, persons are feeling those positive effects, and they will be ultimately the arbiters to say whether or not they're seeing the difference. But the numbers are indicating improvement.
Yeah. So just to add, Dr. Lewis mentioned the area of improvement in relation to uptime over the past 2 months. The information that we've had for more investigations with the banks, because once we see these statistics, Dr. Lewis and his team, they go in and they interrogate the banks as to what is happening. And what we've been told is that over the past 2 months, banks have been doing repairs and upgrades on a number of the ATM machines across the island. So we expect to see that improve in the near term.
Governor, just a clarity, the beneficiary of the monetary penalty is the customer, not the bank. Just checking.
Well, I think it depends on what is the breach that has been committed, and is it a breach that the customer should be put back in a position they were before, or is it a breach that the company is making generally and the company must pay the price, in which case it is to the general benefit of either BOJ or some fund that is set up. Yeah, the government.
Governor, given where you sit and through your untrammeled eyes, where do you think the Fed's going to go, say, for the rest of the year? Just your opinion, this is.
All I'm trying to guide this little ship we have here. I can't think about the ocean liner, because, that's beyond my pay grade. I certainly hope that the trend that we are seeing continues, which is a similar trend to what we are experiencing here, which is that inflation is coming off slower than they had expected and wanted, but nonetheless headed in the right direction. And we'd like to see that continue, because many of the things that impacts their inflation impacts our inflation also. Not everything, but some of the stuff does, yeah.
Yeah, just to add, the assumption we make that underpins all our forecasts is that certainly by the last quarter, they will begin to make an adjustment to the Fed rate. And that is consistent with what consensus forecasts are now saying. So that's our assumption.
Quick question on the ABMs. The 2 largest banks have said that they feel somewhat pressured because there are other financial institutions using their ABMs. So will the BOJ then make recommendations to other financial institutions to install ABMs in relation to their customer base?
No, I don't think we want to legislate that. I think that's something for the banks to settle amongst themselves. Yeah? Not a BOJ issue from that point of view.
And bear in mind as well that how the network is set up, it really does allow for interoperability. And I think this is something that perhaps members of the public may not be as aware of. So once you have a debit card, you can use that in any ABM that you wish. It's not that the card is only usable in your bank's ABM. So part of the dynamic I think that we would want to see is where the total network of ABMs are being leveraged. All 890 of them are being leveraged to provide financial services to members of the public.
Quick question. Jets. Isn't Jets owned by the 2 major banks? Or substantial?
Most of the banks, 1 or 2 are not owners, but it's owned by and large all of the banks except 2. Yes.
Yeah.
Just following up from what Jide just said, some of the banks bemoan the cost of these ABMs. A lot of them say they're prohibitive. So, for instance, if you have some of the behemoth banks say to themselves, well, look, we're going to put in just a basic ABM machine that can't do really what it should do. Can you intervene there and say, for instance, a more bespoke bank, a smaller entity, does something a lot more fancy, for a lot more capabilities? How do you monitor that situation?
Yeah, so the service level standards that have been issued in April cover a wide range of subject matters that the banks have to attend to. One is accessibility, so whatever ABM that is being installed, it needs to have the facility to allow members of the Jamaican community that are disabled to be able to access it. It has requirements in terms of fraud management. So they should have mechanisms implemented on the ABM that will either shut down the machine if it's being tampered with, or otherwise give some sort of alert so that members of the public don't end up doing transactions with an ABM that's, for want of a better word, tainted. It also has requirements in terms of the kinds of information that the customer should be able to retrieve from the ABM. We did not specify the kind of technology that should be in an ABM. We thought that was a business decision. Each bank has to look at its target market, has to look at its business model, has to look at issues of affordability and make a determination as to how to match the price point of acquisition of that particular ABM with that technology with their target market. So we have left that up to the banks to make determinations on. What I would say is that when we surveyed the banks in terms of their plans, over the next 2 to 3 years, there's significant investment planned to build out ABMs across the island. And our estimates right now are looking at over a 3-year period, over $1 billion being invested by banks in aggregate in terms of the stock. And that's looking at moving the total count of ABMs from the 890 that I would have mentioned to just over 1,000 and spread across the island. So banks are taking this particular matter quite seriously. They're looking at how to reach new customer segments. And there's also a realization that they have a responsibility to ensure that members of the public do have easy access to cash. And this is part of that response. Of course, it will take time. So these are plans over the next 3 years with deployments at different rates depending on the size and the complexity of that particular business plan. So that's to just give a preview that this is not a static matter, but some of these things do take time to implement and implement in a way that will change the customer experience for members of the public.
Thank you, Dr. Lewis. We have questions online from Karina Bennett. The Jamaica Bankers Association last year said that it was working with the banks to have more stringent measures implemented to minimize financial fraud. Those measures should have been finalized by now. What sort of conversation has been happening between the BOJ and JBA as it relates to minimizing financial fraud? And additionally, there were reports that BOJ does not have the mechanism to capture all fraud-related losses. What is being done to address that?
All right. So in terms of the first question, the JBA has a number of subcommittees that focuses on different matters. One of the subcommittees looks at the whole matter of fraud and has been engaged in developing a set of standards internally for its members where that is concerned. We are aware of that body of work and have reached out to them to see where they are. It hasn't been published as yet. What we intend to do over the ensuing weeks ahead is to engage with them to collaborate. And perhaps, as we collaborated with the FSC in the service level standards for ABMs, perhaps this is another area that we can collaborate with the FSC and with the JBA in terms of issuing service level standards for managing customer complaints, many of which emanate from fraud events. So this is one particular area that I think we can continue what the governor has been terming as Twin Peaks practicing, and we'll see how that exercise evolves and what it leads to. So that's certainly one initiative or another initiative on the Twin Peaks practicing that we can take on. And I guess the broad point is that there is a lot of benefit, I think, for collaboration between regulators, members of the JB, and members of the public in terms of building the kind of banking system that is fit for purpose for all stakeholders. In relation to the second question, I want to clarify, just to reiterate the question, that the Bank of Jamaica doesn't collect fraud information currently or doesn't have a full picture. That's not quite the framing. Currently, under the BSA on Section 39, banks are required to immediately report an incident of fraud to the bank. We do collect that information. We have a template. That information, because our mandate is on safety and soundness, focuses on whether or not that fraud event or set of events could undermine the safety and soundness of the entity. So it's focused a lot on the degradation of assets of the entity as a result of fraud. And those results basically have told us that fraud events in aggregate on an annual basis, like 1-2% of their capital base, which means it's not a concern from a going concern perspective. There's not an issue in relation to the magnitude of frauds. What we currently do not collect is the information in relation to whether or not that particular fraud event affected customers. That is guided by our Code of Conduct, which was promulgated in 2016, where customers first go to the DTI, they report an incident. The DTI is required to respond to them within 5 business days and resolve the issue within 45 business days. If the customer during that point of engaging with the DTI doesn't feel satisfied that they're making progress, they can reach out to the central bank and we collect that information. And then we also engage with the DTI to ensure that it is resolved in a timely manner as stipulated by the code. So that's the process. So the information we have is the information that is pushed to us from members of the public that are not satisfied with how their matter is being handled by the DTI. The information is sent to an email address, customer.complaints@boj.org.gm, and we process those complaints. And the aggregate of those are published in our annual report. So, for example, last year we would have received over 400 complaints, which we would have assessed and given responses to.
Thank you, Dr. Lewis. Any further questions? Okay. Okay.
My question is for the ABMs. To what extent do banks have to fulfill a mandate, for example, with our friend who is signing in the back? That's the ABMs, for example. Do of the 890, how many cater to persons who are blind? Is that something that the BOJ take note of? And my second question is of the notes, the new notes. Can the BOJ state whether or not the timeline for all the old notes that are in circulation, what's the timeline for that? What are you seeing right now?
I may not have gotten your first question correctly, so I just want, if you could just repeat for my benefit.
So for the ABMs, you mentioned that there are 890 or so. I wanted to find out of the 890, does the BOJ take note of how many caters to, for example, those who are blind, those who are not physically disabled, but deaf, for example, or a friend who's standing in the back right there. So that was what I made mention of.
All right, thank you. Okay, so so recall that the ABM standards were issued in April, and banks have 9 months to transition to be in compliance with all of the various components of that service level standard. In relation to the requirement to ensure that the ABMs are usable by members of the public that have disabilities is something that they are going to be writing to us with their business plan. to indicate what is their intention. But the service level standard did not say all DTIs need to make sure that every bank needs to have an ABM. They're going to write to us, they're going to tell us their plans. We're going to look at the law, because remember, there's legislation that was promulgated by the government in 2013 that talks about access to services by members of the community that have disabilities. So we're going to compare their plans with the law and see whether or not there's conformity. So, you know, we'll be able to furnish you with more information as time goes on in terms of what their plans are for that particular community. I'll hand over the next question to DG Haynes.
All right, thanks, and good morning again. Okay, so in terms of currency in circulation, total banknotes, in terms of value, approximately 87% of that are the new notes. So over time, the old notes are being redeemed at Bank of Jamaica. I had said here some time ago that we are giving it a 2 years from issue date, which was last year, June, before we actually demonetize those old notes.
Thank you, Mrs. Haynes. We have come.
Just one quick question. It just seems to me, what is your view of the rate in which we're embracing digital banking and so forth? I mean, I kind of remember even the generation, like in my folks' time, you'd go to the bank with a little blue book and they'd know Mrs. Jones and all the rest of it seemed more tranquil. We now live in an age of fraud, the cost of cybersecurity, expense pressure on the entities, pressure on the regulators. All right, it just seems like a bloody headache to me. What's your view? What's your view on this, on digital banking now? We are no longer in benign times.
All right, so looking at statistics for digital banking, and what we look at is in terms of means of payment, what persons use for means of payment. When we look at in terms of the number of transactions, of course, the debit cards are the highest up there. When we look at value in terms of beneficiary payments, the RTGS. So that to me and to us at Bank of Jamaica is a sign in terms of the move away from cash to more digital payments using your debit cards, your credit cards, and of course your online transfers via the RTGS or the ACH. It's difficult to measure how much cash is used for means of payment to compare that. And of course, as we move and push our Jamdex, that of course will contribute to other means of digital payments.
Thanks, Mrs. Haynes. We're at the last question from Stephen Jackson. Is BOJ planning in the second edition of the new notes to relook the similarities between the $100 and the $1,000 notes and the $50 and the $5,000 notes?
I didn't realize that there was a similarity. I didn't realize at all. Let's look at the 500. I mean, I'm sorry I don't have the banknotes here, but the $50 note is a red, right? What is it, the 50 and the what? Yeah, so the 5,000 is more brownish orange. So I'm not sure what is the similarity there. Because what we try to do when we introduce this new series is to look on the color wheel that is possible for banknotes and try and get a distinction among all the 6 banknotes. So I'm not sure. The 100 and the 1,000, one is green, one is blue. I'm not quite sure the similarities there. No, see, I'm not sure of what the similarities are. I didn't want to go there, the governor, but yes, I mean, maybe in dim light conditions, yeah, people first look at the color. That's why we sought to distinguish the color. But at the end, you look on the denomination, the value on the note, as well as know your banknote, know your subjects on the banknote.
I'm always surprised
Yes.
when people talk about the distinction and the color and all that. You go to the United States,
All them look the
that
same.
dollar look the same, whether it's $100, 50, 20, single, but we don't complain about those. Because we read the number.
And on that note, we bring the press conference to an end. Thank you, ladies and gentlemen.